Alright traders, I am back again with another video. In this video we want to take a look at PM Philip Morris International Incorporated. We're going to look at the fundamentals. I'm not going to go through this really fast. I'm not going to go through it really long. I'm not going to take much time with it. I'm going to just show you what we're looking at. So the things that we're really paying attention to, because it's a fundamental analysis, is the profitability, the valuation, the growth, and the health. So on a scale of 1 to 10, these are based on. So looking at the profitability scale, you can see it's a scale of 3. So the return on assets, okay, it's pretty much in line with the rest of the industry. So where you see a blue, that's average. Where you see a red, that's below average, and the green is above average. That's good. All right. So basically everything for the profitability rating is okay, nothing great. They're doing pretty much what the industry is doing. All right, so the profit to margin, the Petrosky score. So versus the industry, you can see they're about 50%. Okay, and then profit margin 50%. So versus the industry with return on assets 50% and profit margin 50%. Dividends, now really good on dividends. So 5.16, which is a nice return, what you see. So let's look at the valuation chart. The PE ratio 16.93. So you're pretty much saying that that's what investors are willing to pay for this stock, right about where it is. And the forward PE is 13.97. So that's also looking like average, like what investors would pay for. Compared to the industry, slightly more expensive. They're slightly more expensive. Based on the PEG ratio, it's showing your price to earnings for growth. It's indicating that Philip Morris does not grow enough to justify the current price earnings ratio. All right, and then when comparing the EBITDA, pretty much more expensive than the peers. So you could see 33% outperformed on PE, and EBITDA 33% outperformed again. So pretty much that valuation, not really good. Now the growth wise, this is what we want to look at. We want to look at the profitability, and the growth wise, we want to see some good numbers there. So when you look at the earnings, at your EPS here, they're growing by 10.4%, which is good. All right, and their EPS has been decreased by -266 on average over the past 5 years. Not super good, but when you look at that, so over the past 5 years they've had a decrease, but over the last year they've increased. So that's what's kind of important, is what they've done from the previous year. So the 5-year history is not as good, but that 1-year history, so they could be making a move to the upside. So when we look at the chart, you'll understand that a little bit better. So basically, Philip Morris is expected to show a small growth in the earnings per share, all right, in the coming 2 years. So it's basically stating that the EPS will grow by 7.71% yearly. And when comparing the growth rate of the last years to the growth rate of the upcoming 2 years, the growth rate is pretty stable. So that's not too bad. Philip Morris shows a small growth in revenue over the last year. So we already seen that. You could tell by the 2-year EPS. But the revenue for the past 5 years has decreased slightly. So when you look at this graph down here, you could see the projected EPS. They didn't hit it for 2017. Quarterly, again, didn't hit the mark. Looks like it did hit it here, a little bit above. All right, and then yearly revenue, that's kind of important. You want to see a growth. So they had growth rate from 2006 up till 2014. Now, did they top out? So then when you look at 2015 and then 16, there was a growth, a little bit of a growth, and then from 16 to 17, more growth. So we want to see from 17 to 18 even more growth. So Philip Morris is showing growth for the past 3 years, basically, and yearly revenue. And then finally, when we look at the health side, they're almost average, pretty decent. All right. So you can look at debt to equity ratio, negative 2.82. So they're doing better than the average in the industry. The industry average is 0. The Altman Z-score 5.0 in case that PM is not in any danger for bankruptcy. All right. The current ratio 1.16, normal value. Again, the Petrovsky score 6.0. This indicates an average health. So pretty much health-wise, they're not too bad. They're almost average. So we have decent numbers for, I mean, we're low, but we want to see around a 5 would be good because that'd be pretty much average. Profitability, growth, and health is, it looks like this. When you look at the health, you're pretty much saying that this company is stable financially. So that's one thing that you see. You want to be investing in a company that's stable financially and in a company that's growing, all right, and is profitable. So those three things look decent. So we're going to look at the charts and see where this thing comes in from that point. So let's go to the charts with Philip Morris and see what we got going on. All right, so we're looking at Philip Morris right now, and you can see the current level is at 79.93 points, and you also had a 52-week low. All right, so this is the past year. This is the lowest it's been for the past year, and this was the 52-week high up here. So ever since that point, we've dropped down to this low here. So at this low, it's very important what has taken place here. You can see this big gap down. So I'm not going to go back and see what all the purposes were, but there was probably, this was earnings, so it probably didn't do well here. All right. And on this earnings, they dropped down, and since then they pretty much continued to drop till they got to the 52-week low that they set here at roughly 79.26, somewhere in that area. What I'm looking at, and I'm looking for a bounce here for a couple reasons. Number one is look at the distance here. This is my Kijun-sen, all right, and it's flat, a little bit of angulation to the downside, but it's pretty flat. But look at the distance here between Tenkan-sen and Kijun-sen. This is a major C-clamp here. So when you get this C-clamp, one of two things happens. Either price retraces back to the Kijun-sen to get back into equilibrium, because the market is way out of equilibrium here, disequilibrium. Too many, when you look at this, you have too many sellers in the market, not enough buyers, and this is why this market is at the point where it is. All right, but now at this level, more buyers would come into the market, all right, and raise this price and get it back into the equilibrium level here with your Kijun-sen. Your Kijun-sen represents that equilibrium level, all right. What happens? One of two things when you get this far away from, when you get this big gap between this level, this green level here, which is your Tenkan-sen, and this blue level, which is your Kijun-sen. They never really are that far apart, and they never want to be. When that happens, the price is either going to range down here for a good while, or it's going to pull back closer up to the Kijun-sen. That would be the level that I would look for it to move to. With that said, another thing that's going to make me think about taking a long opportunity here. So I would like to take a long here, probably at about a little bit over 80 point, let's say about 80.6, right? So you take a long at that level. You can see this divergence here. Look at this flat. This is flat. It's held this flat level here, but at the meantime, the OBV has been rising, and it's showing a divergence, which is a bullish divergence at this level. Two big things that are making me believe that this is going to bounce at this level, all right, from 79.93 where it is now. May hang down here a little bit, but I believe it's going to bounce, and I believe you have an opportunity for a good profit when this bounces off of this 52-week low. And then finally, there's one more thing that, so really when you look at this, that's what I'm telling you, that you could look for a trade at that point for a long trade. And when we looked at the fundamentals of Philip Morris, we did say that the growth factor was pretty decent. We had a decent growth factor. So understanding that growth factor helps us to realize that this might be the low where the market recuperates, and where this asset recuperates and starts to move a little higher and starts to grow, as it was showing that the possibility that it could do based off of the ratios. This divergence and the distance with Tinkinson-Keejinson with the disequilibrium really sets me up to believe that this thing can bounce. And then also, traders, there's one special thing that you really need to be knowing and really need to be understanding, something that a lot of traders aren't doing, but I want to teach you how to do that special thing that's going to help you to become a better trader when you're trading stocks. I want to teach you that one secret that that's going to help you to definitely improve your trading as far as trading stocks. So what I'm offering you is a 1-year membership at $250, and that 1-year membership gives you access to my new stock course, which is coming out shortly. And that course is going to cover how to trade stocks from the very beginning fundamentally to the very end fundamentally and technically. And it's going to tell you and talk to you about how to follow the big traders. Okay, so there's some things that you need to be doing that you may not be doing, and it's just something very simple, very easy that you could always do, but I can help you to understand how to do that and what to look for. All right, so come on over to FX at One Glance, and if you're interested in becoming a member, offering that for $250 right now. Going to be looking at trading stocks, ETFs. Going to have my stock course out and continuing to trade with Ichimoku, but also going to show you how to trade without Ichimoku, just pure price action and with moving averages. Okay, so we got a lot of different ways that we trade, especially with stocks, because moving averages work very well with the market. All right, but you can see here how well Ichimoku follows the market, how well it works with the market. All right, and then you can see that this sign that is given me at this level is super strong. So that's what we're looking at with Philip Morris. So hopefully, guys, that this helps you out. And remember, that one thing that you need to be doing, you need to learn to do to become a very good stock trader that will help your stock trading. Definitely come on over to my site. Think about becoming a member and learn what it's going to take for you to become a even better stock trader. All right, traders, that's going to be the end for now. Hopefully this helps you out. And keep an eye on this Philip Morris. We're looking for a bounce here. Haven't really given you any levels, but we'll update this and look at where we are. All right. Till next time, guys, have a great one. God bless. So long.